Good morning, traders. It is Tuesday, July 1st. Taking a look at the charts, equities are trading lower this morning. Money seems to be rotating out of stocks a little bit, down about 0.5%. It is moving into the more defensive areas. We're seeing bonds up 0.25%, and we're seeing gold and silver really pop. Gold's up 1.7% this morning, which is a nice pop for gold. Again, working its way up this 50-day moving average in this big consolidation, very similar to a consolidation over here, where I think uncertainty will continue to keep gold holding its value or moving higher. We're also seeing silver up 1.5%, percentage-wise for silver, nothing too significant, but overall it has built a series of bull flags. We have a rally, bull flag, rally, bull flag. It is pointing to higher pricing for both gold and silver. If we take a look at miners this morning, they are trading sharply higher in pre-market as well. We've got the GDX trading up at just over $53 a share. So again, it's similar. It's pulled back. It's finding a bounce and a bid and working its way higher. I think we could see all of these want to hold up and move higher as the uncertainty in the markets continue to unfold. Now, I have touched on the comparison charts of 2008, 2007, 2008 market top, and then where we are now. Originally, I thought we were more so kind of in this phase right here where we had a big breakdown on the S&P 500. Both of these were 20% pullbacks, and then the market went into a dead cat bounce and before rolling over and selling off a whole lot more in 2008. But we have seen the market roll over. We had a bounce and it's turned into a rally, which is what we are long the markets. When we look at our strategy, you can see how we got into this oversold bounce and then it kicked into a rally. We've been long this rally. We've hit a few targets. It's continuing to push higher, both the QQQ and the S&P 500. And when we look at the this chart, if we go back to this previous high, you can see they're very similar type of price action or the market. This is a weekly charts of the S&P 500. And you can see how gold's been moving up and how the equities markets moved up. And we came up and we hit this new all-time high. The market pierced into a new all-time high. And gold continued to push higher. And we're doing something very similar from this standpoint. We've hit new all-time highs. The market is pushing up here on the weekly chart. Gold is also near all-time highs and on the verge of breaking out and rallying. And of course, we just need to see if this is a fake out or a real breakout. And that's the question. You can see what happened last time. The market put in a top, started to sell off, and then it went into this bigger correction, which I thought we were more so over here. But as the stock market, as we take a look here, as the stock market sells off, after hitting some nominal new highs, which just means a small higher high, gets the shorts out, it gets anybody who's not long the markets, it gives them FOMO, a big dose of it. They get long the markets and then the market sells off. During that time, gold broke higher and continues to run. So we could see something like that. If the stock market does reverse and get rejected, gold could have that defensive play and shoot higher while the stock market has that next leg, back down. And then eventually when selling hits the market, we tend to see gold and the stock market sell off together. So that's the potential scenario that we're in now as things have evolved and changed. Again, analysis changes almost daily, weekly, monthly as things unfold. We can't just pick one strategy or one idea and stick with it. We do have to change and evolve with the market conditions. And of course, we went from what looked to be a bounce to go lower, turned into a rally. And of course, we've been taking advantage of that up about, where are we at with this position? We are currently up about 13% or so on this NASDAQ position, allowed us to avoid the chaos and be able to buy back into the market at almost 5.5% lower price and catch some of this upside. So it's not about calling these moves and nailing it and saying, hey, I called that. It's about, trying to do that, but understanding that when the market front turns from a bounce to a rally, you do need to take part of it. Even if I'm bearish, I do want the markets to crash and reset, but we have to do what the charts say, not what we want and what we hope is going to happen. We just have to follow.